Okay, we're going to start streaming on YouTube. So this event will be recorded and made available on YouTube afterwards. So just to recap what we're doing for those who have just joined at this time, we're working on our mirror board. We're mapping the transition towards a new financial paradigm. We're using the multi-level perspective, looking at the landscape changes, the regime, and the niche innovations that may disrupt business as usual. And we're working over here, and at the moment, we're posting up these landscape changes. What do you think of those big changes going on out there in the world? I'm going to share the link for those newcomers. I welcome you to jump in here and post up your ideas on what do you think are the big changes that may disrupt and transform finance over the coming decades. Okay, let's start taking a look at some of these. You're welcome to stay posting as I go through them. I just want to pick up on a few of them and hear what you have to say about them. So we get an idea of what's here. So fixed tradable carbon price. Do we think that will transform finance? Would someone like to speak on how that will happen? Emerging new models of international aid. See the China approach to aid in Africa. Okay, how do we think, what do you think is going on here? Is this the landscape change?
Yeah, that was mine. There's just an approach that's partnering more with built infrastructure, that's creating a different form of debt at the local of. It's also the China approach, which is, it's being debated as to whether it's like a, as you see, monster or messiah, is creating new public-private partnership opportunities at the level of governments, particularly in the emerging or developing economies.
Yeah, that was what I was thinking, public-private partnerships too. There's a lot of stuff going on there, isn't there, more broadly? New ways where we've got this infrastructure funding gap for infrastructure, don't we, around the world, and people are trying to find new ways of funding it, and China is one example of that.
Right. The opportunity is that it supports, positive development, sustainable development, maybe. And then the risk, obviously, is that there's a lot of debt and there's, there's maybe a new model of indebtedness that's emerging and some sort of balance of powers issue.
New kind of infrastructure colonialism, something like this, no? Okay, great. And it's that broader public-private partnerships too. I think that's something new that's happening in finance in different ways. Okay, so blended finance. Who wants to talk on this?
Hi, Joss, it's Maria. I just put it next to it because that's essentially what it is. Blended finance is the partnership between public and private sector for investing, for infrastructure, for good. So I think it's the same point, so put it together.
Great, you're starting to synthesize stuff for us already. All right, housing market pumped up. Anybody want to talk on this? Is that a landscape change?
My video. Hello, just waiting.
Hello.
Beautiful family going on. That's why I was without video because it might be distracting. Hi, Mary, you want to add it?
Yeah, the housing market, like 2007 and 2008, the prices are pumped again in US and UK, Europe. Yeah, matter of time, this dumps again.
Okay, we think that's gonna. What do you think might happen there? What would be the consequence of that?
End of this year, next year.
But what do you think it'll lead to some financial instability, or what do you think might come out of this?
Definitely financial instability of bigger markets and looking for financial or investment opportunities on other sides. Housing market is by market capitalization one of the biggest in almost every country in the world. So where to put your money in when not in housing, and this could be interesting fields where the investors will go to.
Okay. So
my guess is investing again more into gold and then in cryptocurrency. So
okay. So we're thinking about movements in where capital's going because of housing overpricing. Okay, increased pilots and demand on basic income. Increasing pilots and demand on basic income. What's this?
Oh yeah, that was mine.
You're on mute. You're on mute.
I shouldn't be on mute. That was mine too. Yeah, as you can see, there are more and more not only experiments, but also in Germany, for instance, where we're from, there are also like non-profit organizations setting up, collecting funds, like crowd investing, crowdfunding basic incomes for other people to test more and more how basic income can actually really work as a model. And with what happened with COVID, there's more and more discussion going on about shouldn't we have this basic income philosophy? Like shouldn't we have it now? And how could it work?
Okay, great. Okay, thank you. So let's stay going. Increased financial inclusion, gamified investing offers, and Robin Hoods. Is this you again, Doran?
Yes, it is.
Okay, cool.
So as you can also see, there are a lot more investment platforms or exchange platforms going on where it becomes more and more on one hand in a gamified way, but also like for really absolute beginners and not professional traders to really start investing, which so on the one hand, in my opinion, really amazing because you really start the empowerment and the autonomy and really the independence of everyone to really master his or her own financial means. But on the other hand, can be, well, do your own research. You need to be really educated to trade that and do that.
Great, great. It's kind of democratization, Robin Hood of financial instruments, really, and investing and so forth. Massive kind of democratization in there for all sorts of good and all sorts of bad. It's not necessarily a good thing, right? There's all sorts of things going on there. Okay, DAOs, decentralized autonomous organizations. That was you. Okay, I'll stay going. Yeah. So CBDC, central bank digital currency. Is this a landscape change?
Yeah, definitely, because it creates very short feedback loops. I've been talking to some Chinese guys that are involved in this, and actually it allows them to measure how the money is being spent, and they can interact with the economy in very quick ways and very effective ways also, at the expense of other things.
Sometimes scary ways, right? Imagine, I mean, I think that's one of the, when I heard about this, I mean, it's incredible power, isn't it? I mean, China, yeah. It's what, I don't know, was it a $7-8 trillion economy or something? And they would have a database of tracing every bit of information relating to finance in their entire economy. That's incredible power.
You didn't ask for good news, huh?
Yeah. I mean, there's all sorts of things going on here, right? Okay, so environmental destruction awareness. Environmental destruction awareness. Okay, Stefan, is this you?
Yeah, that was me also. It's like many people are connecting the dots between finance as we know it now and the impact it has on the environment.
So it also goes kind of new values too, doesn't it? In some way, like people are actually starting to changing values. People are starting to care about this stuff. Okay, imminent inflation, central bank inflation, developing countries' new ways of dealing with finance. Okay, loss of sense making of having money, increasing regulation on climate transition funding investment. Okay, new theories, finance and economic limitations and neoclassical. Yeah, this is a big change, isn't it? A lot of people used to really believe in this. Anybody want to talk on this?
Yeah, it's me. So yes, I think they are quite linked to one I put, but definitely to find new way to understand finance and economy, and one of the limitations are linked to the debt monetization and synchronization of quantitative easing, externality, negative externality, and what linked to that is how to change investing. So in a sense, we need new model of finance to better understand the causality of things and better understanding how they are interconnected, and how the finance is not only in finance, but they are the part of.
Yeah, so it's almost a paradigm shift, isn't it? That's happened over the past 10, 20 years. We used to believe a lot in this neo-classical paradigm of efficient markets and so forth. a lot of that start to fall to bits. And that's what I really mean by landscape change, right? When our values change, or when our theories and mental models change, well, a lot of things follow from that, right? Everything in economics and finance is relative to, it's all about value, and it's all relative to what we value and what we consider valuable and so forth, and how we construct our models. The whole thing is constructed out of our models, isn't it? So when they start changing, big things are going to happen here. So that's what I mean by the landscape changes. War on cash, yep. ESG. Is ESG? What do we think about ESG? Who's this?
That was from me, Toby. ESG is the governance around environmental sustainability, and more funds are right now pledging themselves to support ESGs or to implement them. And that's currently a large trend in the asset management industry, to really understand what are good industries and bad industries. So they kind of get tagged, and then out of a sudden they need to disappear from different funds. So one of the largest companies like BlackRock and Allianz Global Investors, they pledged to not invest in coal industry anymore. And of course, that's changing the dynamics also.
Yeah, but it's difficult stuff. I mean, it's a bit problematic, isn't it? All sorts of things get called ESGs, and we're still in the wild west, I think, of that stuff. And you're not really sure.
You have lots of greenwashing in between, but regardless, the need for transparency is given. So this also changes the way how not only consumers are purchasing goods on a like B2C level, but also how B2B investments take place. Yeah.
And hopefully we get better at like these frameworks and these models, and actually really figuring out what is really good investments in terms of ESGs and what are not, because there's obviously a lot of kind of stuff going on there that might not be too desirable. Tax haven evolution, impact weighted accounting. Yeah, impact weighted accounting. We'll put all these down here. I'll synthesize them a bit better afterwards, but we'll just get started here. So few children per family, I like it. Large number of retired people, satisfied consumerism. What's this about?
That was me again. Well, yeah, people just have everything. I mean, we've reached a level of wealth in general that people just have more or less can buy and consume everything, that they really start to get, on the one hand, bored, or also the good side is there also more consciousness arises, more sustainability thoughts arise. But on the other hand, if you're always looking for consumerism, you might get into trouble when there's a separation.
And it's true. I mean, how much we've got so much wealth there. The accumulation of wealth around us in developing economies is staggering over the past number of decades. The global economy has just expanded massively. And that's the kind of paradigm shift, just having all that wealth around us and the potential to start changing, not having scarcity. If we could get rid of the mindset, right? That's part of it, isn't it? Even if you have a lot of wealth, you can still be trapped in the scarcity mindset, and you're still trying to catch the next $100 or $1,000. So that's a big change, I think, that's happening. Increasing wealth scarcity, security, jurisdictions, and illicit financial flows. Yeah, anybody want to talk about this?
Well, that one. So I think there's a report that came out today about the rich in America pay essentially nothing in tax. And a lot of that's through using secrecy jurisdictions, tax havens. And then there was something elsewhere about aid to Africa. A lot of that aid ends up, going in the front door as public debt and going out the back door as private wealth in the hands of, people running countries and their friends. And so, there is a lot of wealth, but it is very, very concentrated and very, sort of obscure and hidden from public view. The Panama Papers and the Paradise Papers came out a few years ago, it's just a matter of time till another sort of thing like that comes out, just showing where things stand now post, once we're going to be post-COVID soon.
There's obviously a big mismatch, really, between our jurisdictional frameworks and the way finance has evolved. It's obviously gone global, and our legal systems are still local or national, I should say. And yeah, you can do all sorts of things. You can bounce money wherever you want, and it's very easy to. And now the internet, right? You can bounce money in even more places on the internet. So it's kind of getting massive mismatch, right, between the legal system and what you can do with money in terms of globalization. Global crisis like COVID-19. How do we think that's going to change things here?
Well, we've seen how much this already has changed in the past month. Like, I mean, we got introductions into home office, and people start moving more on the countryside. Like even real estate, which already has some effects, or you can already feel some effects in that. And well, for a lot of people, since on the one hand, COVID is not over yet, and on the other hand, a lot of people feel like, well, this has been just the first global pandemic crisis, and more might come. So how will we regularly live with that? Also with this up.
Okay. More awareness of interdependencies. Okay, I guess that's tied here to this. Okay, surprisingly, the WFH that has been forced on us by the pandemic is creating a rethinking of a work-life equation. This will also have a deep financial effect. Okay, this is Tanuja. So this is tied in here, kind of broader things going on in the world. EU new Bauhaus EM. Someone want to decode this for me? No, it's a mystery. Okay.
No, that was for me. That was for me. Sorry. That's another thing. Like there's a Green New Deal in the US, right? And we have basically the very same program in Europe right now. It's called New Bauhaus. Part of it is New Bauhaus, and it relates to one of the largest financial markets, and that is the real estate market. So there's a trend towards more sustainable buildings and more sustainable infrastructure. As a consequence, investment patterns will also change. So they are right now rethinking regulation to incentivize people to invest in more sustainable housing with new financial products also.
Okay, great. This one here, regenerative finance. Anybody want to talk about that?
Yeah, this is me. So basically, in the same sense that we talked about the need for financing for solutions, there is the concept of regenerative finance, which means financing not just to kind of be self-sufficient and like a circular economy, etc., but actually regenerative economy. So using finance for the sustainable development, for, instead of like depleting, doing better. We are actually restoring the ecosystems, and we're actually financing the growth of everything that we destroyed in the past few decades.
Yeah, it could be a really big one, couldn't it? Like it's a paradigm shift. If it's such a fundamental conception in finance that it's almost extractive by default. Like that's the way the whole system looks at its investments, isn't it? It's thinking, what's our return on investment? And it's shifting from, it would be a shift from an ecosystem view of the whole thing. What's this thing going to do for me? How can I put something in it and get more back out of it? To what is this thing and how can I help it? How can I enable it to thrive? How can my investment help it to develop and grow and thrive? Paradigm shift, wouldn't it? I mean, that would change everything almost if we did that.
Yes, I'll just add that's kind of like an evolution of ESG, right? ESG is like very basic, and that's what we have right now. And the whole kind of concept in it is that financial industry, we're starting to look much more at a longer term versus focusing on next quarterly results, because we know if we just look at a very short term, there's not going to be any future to be in. So this is where the major asset owners, such as pension funds, where the wealth is currently allocated, and their interest is much longer term, their horizon is much longer term, are focusing on this. And this is where the paradigm shift is coming to play, because we can't just survive looking at the next 3 months anymore.
Yeah, and they have a lot of money, don't they? Those pension funds and the sovereign wealth funds, massive amount of money stored up there. Okay, great. Thank you very much for that, guys. Let's move on. That was the landscape ones. I very briefly started to cluster them, but we'll do a better job afterwards and share that back with you. But now we're going to go down here and we're going to talk a bit about business as usual. This is the incumbent system. This is what it looks like at the moment. So has some good things about it, but also, as we all know, has a few little issues here and there. 2.5 billion people globally don't have access to formal financial services. In finance, at least, we've gotten ourselves into a state of the world where just the complexity of the interaction between all the algorithms and the exchanges themselves and all of the different timescales on which investment is taking place, just sort of understanding that complexity and controlling it in some sense, I think is a pretty serious challenge for this century. Just the incredible kind of complicatedness of this system that we've built is like vastly kind of beyond our capacities to grasp it at this stage with all those algorithms and so forth out there. It's one issue. So this is Alex Tapscott and Don Tapscott talking about it, the financial system. Why is our financial system so inefficient? Because it's antiquated. A kludge of industrial technologies and paper-based processes dressed up in a digital wrapper. Secondly, because it's centralized, which makes it resistant to change and vulnerable to systems failures and attacks. Third, it's exclusionary, denying billions of people access to financial tools. Bankers have largely dodged the sort of creative destruction, but while messy is critical to economic vitality and progress. Too big to fail problem. Okay, it also suffers a lot of financial fraud, right? 45% of financial intermediaries, such as payment networks, stock exchanges, and money transfer services suffer from economic crimes every year. I think this is a PwC report. It is staggering figures. If you look at the balance sheets of British banks and ask what percentage of them are lending to real non-financial businesses, the answer is 3% of the total. What intermediaries are doing now is not serving the needs of customers. They're trading with each other. So this is another factor we touch upon. It's become increasingly divorced from real economic activity, people pushing money around between themselves and somehow making money out of that, financialization, we call it. So those are some of the kind of failures and limitations of the existing system. I'd love you to jump in here and post up what are your thoughts on it. Of course, there are some good things about it, but we also have some dysfunctionality. So please join me here. I'll share the link with you again. And let's say a bit about business as usual, what it looks like. We'll take 5 minutes or so to do that, get your thinking on this. If you need any help, post a comment. Okay, for the sake of time, I'm going to stay going. So the incumbent system, too big to fail, definitely one of the characteristics of it. Shareholders versus stakeholders. Reoccurring financial crisis, for sure. Greenwashing, misallocation of resources. Wealth channel speculation versus lending to entrepreneurs. So yeah, you kind of capture, who is this? Yeah, it's great. You capture a lot of different aspects of it. So big players, yep, so that's these guys here. Non-performing assets of private stakeholders and government makes the people's life miserable. Not optimizing the whole system, only a part of it which is extractive, leaving the whole vulnerable to crumbling. Anybody want to talk on this?
Yeah, hi George, this is me, Mukesh. So I hope you can hear me.
Yep.
Yeah, I think it's self-explanatory. The current financial system is only this monetizing something that they can make profit out of it. So a lot of environmental and social goods are not accounted for, and that creates a lot of negative externality, right? So the whole, since it is not optimized, there's a tendency of over extraction because of this monetization that leaves only something that can be extracted, and a lot of problems. All those problems that's mentioned here are springing from that mindset. So unless we optimize the whole, and I'm not sure how would that look like. Probably a lot of
Sorry, sorry, Mukesh, your audio's, your internet's breaking up, unfortunately.
Policies are trying to do, but not with all of
Yeah, it's a good point. Right, we're optimizing, I'd say accounting. We're not accounting for the whole, so it can become extractive and leaving the whole vulnerable to crumble. And we're at a kind of, I guess we're at a kind of point where everything's kind of crumbling. And the question is, what happens then? Can we change this somehow? How can we change that? Right? And I guess that's a lot of what the whole impacts and ESG and so forth is about. It's starting to expand that value spectrum in the accounting system so that we start to account for the whole. And
Hello.
It stops. Yep. You're back, I think. Sorry, you're
okay. Yeah. My connection was not very strong. Yeah.
Okay, thank you for that. So what is a bank? Non-bank actors provide bank-like services. So would this be here? Non-bank actors, this might be the innovations down here, I'd say, because that's what's happening. Non-kind of traditional actors can now start providing bank services, and that's the new innovation. Centralized control. Check out the current Reith lecture, Mark Carney. Okay, cognitive bias and anchoring. Yep, disconnected between GDP, unlimited growth on a planet with finite resources. So again, it's not really accounting, missing a certain accounting system. Assumptions about linear Newtonian interpretation of economics. Yep, assumptions about creation of money and role of debt at sovereign nation level. Modern monetary theory needs to be stress tested. So it's definitely a national system, isn't it? The whole thing kind of based on the nation state framework. And that's one aspect that may be changing here. Okay, the economy is always going to be the same mindset. Yeah, take the past and kind of project it onto the future. These ones down here, centralized groupthink, collusion, ineffective, corrupted regulation, and fraud. Okay. Okay, for the sake of time, I'm going to stay going. I guess it's more these ones that we're interested in, these next few ones. This question of what are the new innovations? What new things may help us here? You know, things like new technologies. The third generation web is going to introduce a whole kind of slew of new innovation, distributed ledgers, token economics, being able to just send money like we can send information would be a bit of a radical breakthrough here. Also, this one that's non-bank actors providing bank-like services. Hope other things changing here. Please jump in and post up some of those as to your thinking on what these new innovations might be like. Okay, I'm going to take a little look at what we've got here. Platform ecosystems allowing for new configurations, public, private, community-based, small, open, local, connected. Anybody want to talk on this?
That was me. This is something I've been particularly interested in. I've been working with, not working with, but I've been following along Boundarless and what they're doing with platform development. And I think if we're going to be online so much like we are right now, that we need to have a more robust infrastructure below us, not just the, social connections, but something beyond that that exists even when we go to bed.
What sort of platform ecosystems allowing for new configurations, public, private, community-based? See more something community is what you're saying?
Well, it's the idea of being able to build, almost thinking about the virtual world as being three-dimensional and thinking how you create new value by being able to move things around, which you can't do physically. I mean, basically, we're seeing the economy change from physical firms, existing geographically, to internet-based firms that are finding new ways of creating value. And it's hard to explain because it's so new to me, and I think so new to many other people. But I think it's going to make a big difference about how we go forward in the world, because it's going to give us people who are not connected become connected, then find new ways of working together to transform the world.
Yeah, I was listening a bit to Peter Drucker, and I don't know, maybe 50, 60 years ago, he was talking about the knowledge worker and the new kind of economy, the knowledge was a very different, I think that's part of what you're getting at, that we're creating knowledge is kind of what we're doing, and information and putting things together. And that's very different from working on the factory line and the kind of economics. And this is going to be a radically different economic paradigm, one that's matching the knowledge workers like we're doing here, and the way we create value by putting things together, ideas and information together, it's going to be very different, isn't it?
What emerges out of all those collective knowledge workers as agents coming together, what emerges out of that at a higher level?
We're still stuck in thinking of widgets and things, our economics, aren't we? When ultimately we need something that's representative of this new kind of economy. So what is a bank? Okay, we'll cover that. Tanuja, what do you want to share with us here? Digitization of money, massive impact on access to BOP.
So BOP is the bottom of the pyramid. So we've seen this already across the globe, having a smartphone and what it does to not just access, but how it empowers local economies. And in parallel to that, we are seeing the rise and rise and rise of local currencies. So for example, there's the concept of seeds, which is based in the UK, which is now going global. And there have been some running for decades in Switzerland and Germany. The idea being that the local currencies are tied to local ways of generating income. So for example, if a local community is mostly farmers, then the currency has those sort of characteristics, etc. So this will lead, I hope, to reduce top-down control, but I think the future will only work if the local currency is able to plug in to the national currencies. Yeah, there needs to be a way for the two economies to work together.
Local currencies to plug into each other also is part of it. Otherwise, local currency isn't too much use to you. But yeah, very good. Token economics. I don't know if you've heard about that, but that's really a big part of that. So hollow chain, can support all sorts of tokenization. There we go. New business models, approaches, tools, and policies such as product as a service, design for environment, right to repair, sustainable reporting, circular economy, to name a few, try to optimize the whole. Yeah, trying to account for the whole instead of just the parts. Blockchain technology helps the transformation of economy, for example, no hacking, theft of digital currencies. New financial instruments, ESG, linked loans, green bonds. Yeah, all sorts of amazing things are coming along. So creation of tech that is able to track non-financial performance and accessibility of data. Data is going to be a big part of it, isn't it? Getting all this data so we can measure things in a 360 kind of impact their effects. Okay, monetization of spare resources. Yeah, but these tokens may be able to securitize everything, these non-fungible tokens, maybe able to securitize our room or whatever it is. All sorts of things happening there, works of art and so on. Know your customer for DeFi products is possible. No direct link between an account and a person. Okay, so I want to try and make it through all the boards today, guys. So let's stay posting some stickies so that we try and get all of this and we get a full view of what we're talking about in the next 30, 40 minutes. So if we just take 10 minutes for each of these, and that'll give us 40 minutes from now. So window of opportunity, what do you think are the idea, as we saw before, is that these landscape changes are going to create windows of opportunity. See here, these big driving forces, they're going to disrupt the regime and create new potential for these innovations to emerge and rise and flourish. So what do you think some of those are, these windows of opportunity? For example, I have one here. These emerging token networks now offer the potential for unleashing a massive wave of creativity and innovation as the vast flows of financial capital and supply chain information start flowing through these newly built decentralized technologies. Trillions of dollars of security are migrating to blockchain networks. You know, all of these financial instruments over the coming decades, equities, bonds, venture capital, and so forth, are going to migrate to these new decentralized technologies and the currencies, and that's a window of opportunity. We could perpetuate business as usual there, or we could do all sorts of radical things. They also say the largest transfer of wealth from one generation to another is happening at the moment. That's a window of opportunity. This new generation could use it, or we could enable that transfer of wealth to create big changes around here. So please post up your ideas on that. What do you think are these windows of opportunity? Okay, let's take a look at some of these. So, Eve, you've been doing great work here. Accessibility of financial services for the unbanked. Yeah, imagine bringing those extra 2.5 billion people into the financial system. That could change things a lot. Climate changes, ESG. Yep. Wealth transfer between generations, pauperization, middle class inequalities developed. Yes. Okay, QE and debt monetization. And down here, authenticated digital voting system for organization decision making. Okay, how to present the change opportunities, raising awareness of the ongoing situation. Yeah, that could be disruptive, increasing people's awareness. Community funded real world infrastructure, parks, and anybody want to talk on this?
Yeah, like so normally I think those are provided by the city in most places or some level of government. What's to stop individuals from, doing something like that? Maybe you get a piece of land, maybe you get some funding, there's some legal things to work out, but maybe you make it open to everybody.
Well, that's what these new token economies make possible very easily. You can set up your own little economies and people can invest in them. And we're definitely going in that direction. Online decentralized mobs, destabilizing old financial markets through arbitrage opportunities. Yes, I think we saw that recently. So disruption caused by the pandemic, digital first, remote organizations, loss of trust in traditional finance. Yeah, that's a big window of opportunity, isn't it? Rethinking and reinventing our economic and valuation models. People are open to that now because of those big changes in values, that change in thinking about economic theory and so forth. We're open to new valuation models and so forth, and that's definitely a window of opportunity. Better incentives for post-secondary education, existing and ongoing applications of blockchain in Afghanistan and Smart Africa. We can become easier financially, we can become easier financial empowered, independent from central banks and governments, can do this community-based. We set up a WhatsApp group of friends where we support each other to invest in, it's going to be that easy almost in quite soon, a WhatsApp group where you're able to set up your own tokens and fund your own park, as Alex was talking about, and so forth. That could be certainly a window of opportunity. Okay, let's stay going. We're talking now about what this disruption may look like. How may the innovations disrupt the regime? For example, robo-advisors, they're half the price of normal, half the fees charged relative to normal brokerage prices. That's going to be disruptive. Okay, there's all sorts of opportunities here. What do we think those look like? Please grab yourself a sticky and post up your thinking on this. How may the innovations disrupt the regime? Okay, let's take a look. Talking about disruption, right timing, collective buy-in, and pertinence, trust in solutions might allow individuals to bypass regime altogether. Someone want to talk on this? Okay, obvious incentives, reconnect individuals and communities, easy adoption and trust. Anybody want to talk on that?
Well, a lot of the solutions are coming on the horizon or they've already been there, are quite easy to adopt. I mean, the learning curve is much smaller than people expect. And most of the new solutions are trustless, so there's no need to be trusting some kind of a central authority.
Yeah, it is. We didn't touch upon it before. It's kind of a landscape thing, trust, isn't it? Because the whole thing's built upon it. So when that starts changing, this is going to create new opportunities. If we start to trust, we start to trust maybe not necessarily each other, but these mathematics and these blockchains, and that's a new locus of trust. And we're transferring trust from institutions to these decentralized networks and the maths and code that's running them, and that is very disruptive, isn't it? They had a monopoly because of that trust to a large extent.
Yeah, except that now they're just holding the sign, but they're not doing any of that anymore. So people move really away from that.
Yeah. Okay. Innovation disrupts trust in governments and other institutions. Yeah. So it's an erosion of trust too that's disrupting a lot of stuff around here. Just becomes a bot. How would we know? You wouldn't, but I'm not sure that would really change the financial system very much. Anyway, crisis of meaning, examples of success, FUD campaigns. What's a FUD campaign? Anybody want to share this?
It's an acronym for fear, uncertainty, and I forgot what the D means. It's like, all those campaigns where they say, this is not good, this is very dangerous for you, it's not good, This is kind of...
Okay, governments use cyber warfare to manipulate disruptive innovations in other countries. Yeah, a lot of interesting stuff happening there. Cybersecurity, right? It's a big part of all of this too. DLT and the Web3 alt, the decentralization of trust within the financial system, better monitoring of the trust impact, and better governance via DAOs and collective intelligence. We hope. Yeah, it can go in all sorts of directions from here, can't we? This decentralization doesn't necessarily mean all good things. The empire can strike back for sure. Youth bringing in fresh energy and perspectives as they aren't locked into old thinking is hope again. Yep. Move faster than the regulators. Fair game. Okay, great. So let's take a look at least one more in the time that we have. What do we think this new paradigm looks like? What would it look like, this new paradigm? Would it be that we all have our own kind of currencies, our own little community currencies that we have control over? We're able to see everything, transparency, that we're able to invest in anything, anytime, anywhere. The money maybe has multiple dimensions to it. Let's take a couple of minutes to think about this one. Okay, I'm going to take a look at some of these. So token economy, P2P, moving from profit to value, better understanding of the causality link, externalities and true value of action, incentives, impact. Three great ideas there, really changed things. Token economy, moving from profit to value, and better understanding of true impact and incentives. So we're all banks. Perhaps there are billions of types of cryptocurrencies, multiple for each person. The exchange rate between them would be very important. Yeah, and this would all be done, I guess it's the increased digitization of finance makes it possible for us to, yes, have billions of cryptocurrencies, right? And algorithmically, automatically trading between them whenever we do anything without even us thinking about it or even knowing about it. So it's very much possible that we have millions of currencies. So all AI becomes the bank. All you need predict by the algorithms. The AI determines saving, investment, and spending. Very likely, right? We'll have these bots that know all about our preferences and will manage these things for us. And maybe payments and investments will just happen around us without us even like knowing anything about them. We just walk into the shop and the algorithm knows, knows who to pay and how much to pay them, and then it knows where we want to put our money, whether we want to give our money to that charity or this one, or it's all just happening around us, and all we say is, oh, I have these preferences at this time, and it goes and executes on everything else. And money would be this kind of virtual ether thing around us, looking after itself. Development, emerging countries can foster rise with digitization, right? Goes all the way back to what Bora was saying, I think, back at the beginning, right, about China and investing in infrastructure. This is a whole new paradigm. Crypto tokens are a whole new paradigm in investing for commons infrastructure. So we could, maybe get away from that world where we're dependent on China and the US and so forth for investing in infrastructure. So every story is a bank. Every story is a bank. Every store is a bank. Buy on credit, accumulate loyalty points. Yeah, very interesting. The convergence of kind of loyalty points and token economics and what can be done there. Take into account the ecosystem and the impacts. Definitely. This is the aspirational, this is what the new paradigm might look like. Sustainable consumption and production. Values derived from the essence of life, not from material things, or the vitality of things, maybe. If it was a regenerative finance, that could really change things. Who is this? Anyone want to talk on this?
Yeah, hi, Joss. So yeah, you said it actually, regenerative finance, right? Maybe not so much dependent on capitalistic regime as we are dependent as of now, but maybe we can move away a little bit, learn from indigenous way of life, how the indigenous communities are, but kind of hybrid way, not entirely indigenous way, because that might not be possible now since we have already arrived. So there's some hybrid kind of system where we still preserve our way of living.
Okay, fractal and interconnected, fast response, short feedback loops. Notions of countries and other national bodies may become obsolete. Okay, great. Let's quickly do the last one before we wrap up, and then we'll have the full canvas finished, the full story. So please join me here on this last one where we think about how we might enable the niche to disrupt the existing, take this window of opportunity, disrupt the regime, and potentially bring this new paradigm into reality. So please grab a sticky. I'll share the link again. There's one or two new people. and share with us your thoughts on that. Okay, let's take a look at some of these guys. Joining existing projects. So how might we enable the niche innovations to break through into the regime and create a new paradigm? Use what is already out there. Create use cases. Yep. education community initiatives, capital risk investing in startup incubators, especially in unbanked markets, wealth management, pension funds, patient capital. Okay, what do you think these, is this Eve, is this you, number 4 here? What do you think that's going to happen there?
Yeah, the move to green washing and force people to invest in true impact investing and having a measure of impact investing in capital, and of course will change the allocation.
Patient capital, I think is important, isn't it? And as Maria was saying, get pension funds changing where they're putting their money, and sovereign wealth also. Okay. So over here, evaluate existing path dependencies. Yeah, it's good. Who is this?
That's me, because we have to take the reality into account, and it's there are many things where, for instance, organizations like companies and so on, they just don't know how they could operate in a different way. So that would allow to look at transitions, because obviously some organizations are very clear about the fact that they cannot go on like this, except that they don't have a clear idea of how to operate with that, how to make the transition.
So create clearer pathways, illuminate clearer pathways that they could travel along. Okay, refrain from pushing too hard with the reluctant people. Okay, not be afraid to try new things. Just make sure I can still get funny money with my debit card at every step of the journey to promote to the promised land. Okay, be clear about what the present situation is really like. Okay, tell stories. Create a level playing field is a pretty important one, isn't it? Create a level playing field where niche and incumbents can coexist. Eventually, whoever is relevant may remain. Create level playing fields where incumbent and niche can kind of co-create value so that the incumbents don't feel left out. It's not a conflict, I guess, that they're able to work together and create new value together. Okay, so any more ideas here? Shared communicate the benefits and clarify misguided information. Alrighty, great stuff, people. Thank you very much for all of your input here. This is what it looks like, right? This is the first experiment with doing this canvas. So thank you for partaking. I'm gonna take this and with Anna, maybe we'll synthesize this and we'll get an idea of what it looks like, what our thinking on this overall change process is. And put that together. I'll share it back with you guys via email or via social media so that we get a picture of what we're talking about. And thank you very much for partaking in this experiment. I hope you'll join for future ones also. Okay, take care, guys.
Thank you, Josh. Bye-bye.
Take care.